Good morning, student. Today I continue chapter journal entries with some special topic. This is my lecture number 16A. First topic is compound journal entries. Student, sometimes two or more transactions relating to one particular account take place on the same date. In such cases, instead of passing separate entries for all such transactions, only one entry is passed, such as journal entry is termed compound journal entry. For example, suppose on 30 June rupees 5,000 are paid for salary and rupees 2,000 are paid for rent, then journal entry will be salary account DR on 30 June, salary account DR, rent account DR to cash account, because cash is going and salary and rent both are my expenses. So I will write salary account DR, rent account DR to cash account. Amount will be for salary 5,000 in debit side and rent 2,000, and total cash is going 7,000. So I will write 7,000. So this is called compound journal entry. See one more example for compound journal entry. Suppose goods purchased from Ram for cash rupees 5,000 and on credit rupees 7,000. So when I pass the journal entry separate, then it will be first journal entry purchase account DR to cash account, and second journal entry will be purchase account DR to Ram's account for credit purchase. But both journal entry joined together, then it will be purchase account DR to cash account to Ram's account. Amount will be total purchase 12,000, cash purchase 5,000 and credit purchase 7,000. So this type of journal entry is called compound journal entry. Now see other topic, opening entry. Every firm starts its new books in the beginning of each year. Since the closing balances of last year have to be carried forward to the next year, the first entry in each year's journal will be to record the previous year's closing balance of all the assets and liabilities. As it is the first entry, it is called opening journal entry. In this entry, the account of all the assets will be debit and all the liabilities and capital will be credit. So, on the contrary, if the total of liability exceed the total of asset, the difference will be treated as the amount of goodwill. Then goodwill account will be DR also. And when total asset exceed from the total liability, then balancing figure will be capital. Suppose a firm have opening assets cash 8,000, bank 20,000, stock 54,000, debtor 47,000 and machinery 60,000 and liability creditor 20,000, capital 2 lakh. Then journal entry will be cash account DR 8,000, bank account DR, stock account DR, debtors account DR, machinery account DR, 2 creditors account, 2 capitals account. Now When I add total credit side, it is 2,20,000. But in debit side, total asset is 1,89,000 only. So, creditor and capital is exceeding than assets. So, difference will be goodwill account DR, and therefore goodwill account will be 31,000. So when any difference will come in asset side, we will write goodwill account, and in liability side we will write capital account. Now see some other journal entry related to bad debt. Bad debts. I have explained in basic accounting term what is bad debt. When the goods are sold to the customer on credit, and if the amount becomes irrecoverable due to his insolvency or for some other reason, the amount not recovered is called bad debt. The amount which is not recovered from customer is called bad debt. For recording the bad debt, journal entry will be bad debts account DR to customer personal account, customer's name. So, for example, suppose Sohan, who owed us rupees 10,000, is declared insolvent, and 30 paise in a rupee is received from his estate. Then journal entry will be, I repeat once again question, Sohan, who owed us rupees 10,000, is declared insolvent, and 30 paise in a rupee is received from his estate. So, journal entry will be cash account DR bad debt account DR to Sohan's account. Now, total amount due on Sohan is rupees 10,000 and we received 30 paise in a rupees. It means 30% only. And balance amount is irrecoverable. So 30 paise means 30% of 10,000 and it will be 3,000. So cash is coming in the business 3,000 and remaining balance will be bad debt. So it will be 7,000. And bad debt 7,000 is our loss. So according to rule of real account, nominal account, debit all the expenses and losses. 7,000 will be debit as bad debt, and according to real account, debit what comes in means cash is coming in my business, so it will be debit. And to Sohan is giver personal account, so their personal account is credited. Now see, when total amount irrecoverable, only question says someone who owed us rupees 10,000 is declared insolvent and this statement is not given in question, then it will be more simple. Then I will do journal entry bad debt account DR to Sohan's account and amount will be 10,000 because full amount is irrecoverable from Sohan. So journal entry will be bad debt account to Sohan's account. But in this question, 30% amount received from his estate. Estate means assets. So journal entry will be cash account DR, bad debt account DR to Sohan's account. Now some other point, bad debt recovered. Sometimes it so happens that bad debt previously written off are subsequently recovered. In such a case, the journal entry will be cash account DR to bad debt recovered account. Care should be taken that the personal account of the debtor should not be credited because the debtor's account must have been credited while the passing entry for bad debt. Then bad debt recovered when I have written off bad debt account, but after some times bad debt is recovered, then cash will come in business, so cash account will be DR. And 2, cash is coming in form of bad debt recovered. So journal entry will be cash account DR to bad debt recovered account. Now In this connection, personal account of customer will not credited because the customer's name has been credited in previous part when bad debt is written off. So this will be treated as our income. This is sudden income. For business, it is recovered. No one is know that it will be recovered. So this will be income for business. So it will be credit according to nominal account. Question says, nominal account says credit all the income and gains. Now some other point is outstanding expenses. Outstanding expenses. It is quite common for a business enterprises to be left with some expenses which are yet to be paid at the end of accounting year. Outstanding means due, which is due for payment. So this is called outstanding expenses. These are the expenses which should have been paid during the current year but which have not been paid. For example, if an employee is paid salary rupees 1000 per month, and if during the year only 11th month salary rupees amounting 11,000 has been paid to him, then rupees 1000 for 1 month will be outstanding salary. Therefore, journal entry will be salary account DR to outstanding in short form written O by S. For example, S by C means account. Same, it is treated outstanding means O by S. So, to outstanding salary account 1000. Outstanding salary is a liability. It has been credited because it is a representative personal account representing the employees to whom salary are to be paid, and this is our expenses, so it will be debit. Now same second thing is prepaid expenses. Same, there are certain expenses which are related to the next year but have been paid during the current year in advance. These are called prepaid expenses. The benefit of such expenses will be received during the next accounting year. For example, insurance premium amounting to 1,200 is paid on 1st July 2019 for 1 year. Then entry on 1st July 2019 will be made as under insurance account DR to cash account rupees 1,200. But when the books will be closed on 31st March 2020, insurance premium for 3 months, July to 31st March will be 9 months, and insurance for 3 months, that is from 1st April 20 to 30 June 20 will be treated as prepaid insurance, and the following entry will be passed for it on 31st March 2020. It will be, journal entry will be prepaid insurance account DR to insurance account. Now amount will be 300 only for 3 months. So these are some special journal entry. I will meet you in next video with some new topic. Thank you very much.